Hello everyone and welcome to Momentum channel. My name is Mo, and in this video I'm going to be talking to you about 5 different stocks that I intend to buy in the stock market in the week ahead. I'll be sharing with you why I intend to buy these specific funds and what's the rationale behind it, and why I believe that those are going to be perfect options for me in the week ahead. I hope you find this video beneficial. Without any further ado, let's get into it. The very first company that we intend to buy in the week ahead is Amazon, the ticker symbol AMZN. Amazon is a known business to many investors. We all somehow perhaps have used Amazon services one way or another. It's available not only as a giant e-commerce player, which dominates the e-commerce market in the US with 40% market share. Amazon is also available in a multitude of other facets and service industries, including the Amazon Web Services, offering their cloud computing, which dominates again the market by about 31 to 32% of the market share, but also beyond that through their service offerings through Amazon Prime, in terms of their streaming services, in terms of their music services, you name it. Amazon has its own ecosystem, and in terms of the performance of the company, they have been managing to increase their revenue and net income year after year consistently, and they are now in the billions of US dollars. That being said, the shares of Amazon has been quite pricey, in the sense that for investors to be able to buy one full share of Amazon, they have to fork out quite a bit of cash. As with time we are talking about, after our closing price for Amazon is showing to be at $2,911.50. And it is definitely quite some chunk of money in US dollars. While some brokers offer the option of buying fractional shares, it's not offered through all different broker services, which is why perhaps most recently, and after Amazon announced that they intend to put forward a decision to have their stock shares split into 20, that's kind of acted as an almost boost from the lows of close to 2,700. The stock kind of jumped closer to that range of close to $3,000 in a matter of days. Why this is an important decision is the fact that although it's not a done deal, and it's still the decision for a stock split is going to be brought forward to shareholders to make a decision in May, and if that's approved, it would be implemented only in early June. Regardless of that, such a decision would allow for the shares of Amazon to be priced at much lower prices. Assuming these prices that we are seeing for Amazon currently stay, if we have the stock split, the price would be closer to lows of $300 only per one full share, making it easier for many retail investors who would like to buy one full share, or who might not have access to fractional share buying, to take advantage of that and get a piece of this amazing business. For us, you notice we are using interactive brokers in this case, and as a result, we do have fraction of shares of Amazon. Currently, we have 0.12 fraction of a share, and our average purchase price for these shares is at $3,159.70. Regardless of the impacts of this stock split and whether that decision is going to be approved or not, we feel that Amazon is a remarkable business longer term, and that's why we want to continue to add to our existing shares, specifically given that currently we are at the negative 7.9% at this time, and we are seeing an unrealized profit and loss of negative $30.40. So this week ahead, our intention is to add some fraction of shares of Amazon. So that's about our very first pick, Amazon in the week ahead. Our second pick in the week ahead is Shopify, another e-commerce platform provider. Shopify that equips many small businesses to develop their own retail and e-commerce business and offer their products and services through that channel and charge for that. It is available both in Canadian dollars and US dollars. We are showing here our account on Wealthsimple Trade, and the result of that is showing here in Canadian dollars. The last price by Canadian dollars was at $694.03. In the last trading day, it was down by 1.85%. We have 0.35 fraction of a shares of Shopify currently in our tax-free savings account, and it is down huge. It is down by close to 50%, with an average price of $1,371, close to half the price that we are seeing right now. definitely we want to take advantage of that and buy to our existing shares of Shopify. It's the reason we are going to add to our existing shares of Shopify, though. It's not just purely because that the price is down. It's definitely one of the reasons, but not the only reason. I'm looking at the charts for Shopify and taking a look at how the price of Shopify is in relation to its trailing 12-month sales. If you look at it for the past 5 years, currently Shopify is trading at about 15 times, almost 14.7 times its sales for trailing 12 months, which is one of the lowest it has been in the past 5 years. The lowest I think it has hit was closer to 13. And at one point, if you look at it, close to the beginning of 2021, at its highs, it was hovering around the 60 ratio, almost 60 times its trailing 12-month sales. And that's when Shopify was trading at. And it's definitely a huge discount compared to that over the past 5 years. And we think this could be a reasonable time for us to pull the trigger and take advantage of that. You notice, for example, the Shopify stock price in US dollars available on New York Stock Exchange was last at $544.37. After hours, it was even down further to $542. If you look at the past 1 year, the stock is showing to be down by 53%. The past 5 years, still it's up massive, as you saw, over 730%. But year to date is showing down 60%. Past 6 months is showing to be down 63%. 1 month down by 38%. Last week was down by 8.39%. We think that that's an opportunity for us to take advantage of that, especially as you notice the revenue for Shopify is estimated to continue to grow for the years to come. For example, in 2022, the revenue is estimated to reach over $6 billion. And in 2023, it's expected to reach over $8 billion, which is way more than that of the revenue reported in last year, being at 4.61 billion US dollars. Our next pick here is going to be Dividend Growth Split Corp Class A shares, ticker symbol DGS. This one is available in Canadian dollars. The last trading price for that is at $6.78. We made a video on our channel recently talking about the split shares funds that tend to have quite high distributions on a frequent basis. In these cases, they are all on a monthly basis. For example, for DGS, the dividend yield currently is at close to 18%, which is just incredible. I'll encourage you to check out that video. I will add the link in the description of the video if that interests you. But DGS does pay its dividend monthly, and its annual yield is currently close to 18%. They've been starting to gradually buy shares of DGS and take advantage of those monthly reliable dividend income that they've paid. Through this DGS, which is Dividend Growth Split Corp, it's a fund that invests in high quality dividend paying Canadian stocks, and this kind of split corp fund uses the call strategies to generate more passive income for investors in Class A shares. So not only you are getting a reliable high distributions, but as a result of that, subsequently you notice in terms of the past performance of DGS, you're still getting some decent return in terms of the appreciation of the values for the shares. In our case, we currently have 10 shares of DGS in our tax-free savings account. It is currently up by 3.83%. We started forming this position last week, and we're glad that in just less than a week, it's already showing to be up. We also have 1 share in our registered retirement savings plan, and there it is down by about 0.5%. You saw the average prices that we've bought these at 4, and our plan is in the week ahead to continue to add to our shares of the DGS and build this into a much larger portfolio position and count on that reliable distributions that they pay on a monthly basis. Currently, for each share, they are paying 10 cents of monthly distributions. The next pick for us for the week ahead is Royal Bank of Canada, ticker symbol RY. It is available both in Canadian dollars as well as in US dollars through New York Stock Exchange, if that interests investors outside of Canada. The last price in Canadian dollars was at $138.15. The last week, you notice the stock was fairly stagnant. And if we look at our positions, we currently have 5.72 fraction of shares in our non-registered account, We also have close to 0.6 fraction of shares in our tax-free savings account. In our personal non-registered account, it is up by close to 34%, but in our tax-free savings account, which is the most recent addition, it is almost stagnant at close to 0.12% negative return at this stage, which is just about 9 cents negative return so far, given the size of our shares, about half a share. We intend to add to our existing shares of RY. It has a dividend yield of 3.21%, and the price to earnings ratio for Royal Bank of Canada currently is at $12.27. The highest price it has hit in the past 1 year was at $149.60. The lowest price was at $114.91. Lastly, our fifth and final pick for stocks or ETFs to buy in the week ahead is BMO Canadian High Dividend Covered Call ETF, ticker symbol ZWC. We've made a video talking in particular about covered call ETFs and in details on what those options are. Be sure to check that out if that interests you. But ZWC is the one that last week we talked about. We intended to buy, and we did. We plan to continue to buy and add more to our shares of ZWC in the week ahead. In this case, we currently have 22 shares of ZWC. It is a monthly dividend paying kind of fund, and it has a dividend yield of 6.22% at this time, which is just quite decent. In this case, our 22 shares are just up by close to about 1%, or up about $4. As I mentioned here as well, you are getting a monthly distribution paid, which is reliable. ZWC, or BMO Canadian High Dividend Covered Call ETF, seeks to provide exposure to the performance of a portfolio of dividend-paying Canadian companies to generate income and provide long-term capital appreciation while mitigating downside risk through the use of covered call options. This is our fifth and final pick for the week ahead. I would love to hear from you. What stocks or ETFs are you planning to buy in the week ahead? Are any of these picks that we talked about in this video on your list? Let us know in the comment section down below, and share what you plan to do in the stock market in the week ahead. I would love to hear from you. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to smash that like button and share it with someone who might benefit from the video as well. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrency, and real estate, as well as discussing ways to reach financial freedom. Thank you, and we hope to see you next time.